Alright guys, welcome to another trade review. Let me quickly explain to you how I got this trade on Monday, June 15th, NY session. Here's the trade execution and here's the trading view markup. So let's quickly hop on the chart and let me explain. Really, it's a simple issue of following rules over and over again. So I have one rule that during the NY session, if I see a 15-minute fair value gap being created, it either guides me to enter a trade or guides me to stay away from a trade in the opposite direction. So we can clearly see here from yesterday, Sunday, we can see the huge gap that we had up here, creating this new week opening gap right here that we are still waiting to trade into. Probably sometime during this week, we might trade into the new week opening gap, but for now we are doing what the market is showing us. Tokyo showed all this momentum, London consolidated. There's a belief that after the consolidation like this, we might take London high and then sell, and I would have been willing to do that, but the fact that we are back so close to these all-time highs and all these liquidity levels here, you see us taking this one right now, and all these liquidity levels right here makes me know that there's a strong draw to the upside. So on the New York, I was simply waiting. On the 1 minute, during the first opening minutes of the New York, there wasn't really any good sweep. So right here, this is the first opening minutes. If there was a sweep here with fair value gaps and then an inversion with price inverting them, I would have considered that a sweep and a possibility that we're going lower. But we can see what price action did was all the way higher with so much momentum. And I knew that this momentum would probably be forming a 15-minute fair value gap. So what I did was I changed my time frame, readjusted myself, and like I suspected, there was a 15-minute fair value gap lying down right here in the middle of New York session. A New York created fair value gap. So on the 1 minute, all I have to do now, if you go through my videos, you will know my entry. On the 1 minute, all I have to do now is wait until price does what? Price trades into that fair value gap. It happened right here. So it happened here, but when it happened here, there was no fair value gap here when price was trading into it, so we cannot use it. It went up and happened here again, presenting another liquidity sweep here. On this one, we did get a fair value gap to the downside. So what I'm waiting for is for this fair value gap to be traded above and for price to close above, which happened right here. And so when that happens, I'm just waiting for a retracement down and a move up, showing the clear intent with a bullish fair value gap this time around to the direction where I want to take price. And that's what happened right at this point here. So I simply put my entry at this point right here, long 2, put my stop loss well below these lows here that were formed by this retracement. And sometimes I just like to use the shorter of these candles here that was swept as a target to just seal my liquidity there, because I know that since this candle right here swept this candle's liquidity is definitely exhausted for the market. So even if price has a need to sweep below all these levels, it will probably not want to come here. So this way I put my liquidity stop loss barrier. So I targeted these highs here. I typically like to target a 2RR. That's typically what my system thrives on, but 2RR is typically at liquidity level. So I like 2RR to save me from chasing a liquidity level. So what that means is that the way I like my 2RR to work is, if this high was a lot higher right here, then I like just targeting 2RR and leaving the high. So if price even wants to fail, it could go up to my 2RR and then fail. But when my 2RR will require me to go above the price, the high, I rather not do that. So in such cases, rare as they may be, I like to just settle for anything that's reasonably close between 1.8 and 2RR, and in this case I got a 1.86 trade. So that's basically the trade. 5 minutes explanation, not too long. I just hope you can study, create some rules, because one of the most important thing you have to know is that this trade has been backtested numerous times by me. Let me show you what I mean. These are my rules here, and this is my documentation and my journaling. So when I journal, I write down the characteristics of the trade so that I can figure out which setup favors my entry more and which setup fails my entry more. So right here, you can see that we had the momentum, we had a New York created 50-minute fair value gap, and then this system is the inversion fair value gap and the fair value gap one after the inversion and the reversal back to the direction I was looking for. So you see it here. I've journaled this right now as a win. If you go up, you will see exactly the same setup right here repeating itself. Let's see what I journal that as. No, okay, no entry. It was the right bias, but market didn't tap into my entry. So let's see if we have it again. We have it right here. I did not take the win trade for some reason. We have it right here again. It was a win. So you see, just journaling it will give you the ability to know what trades favor your entry pattern and your reading of your way of reading the market, and what trade does not favor it. So journaling is a must, guys. Your technicals, they cannot work for you if you do not journal, because your journal is what helps your psychology to hold through the bad trades or through the unfortunate trades or through the losses you may take, understanding that statistically you still have your edge. So that's going to be that for today, guys. Keep on studying, study hard, and trade easy.